All right, guys, I want to put this video out real quick. If you're working with investors, I just wanted to run the numbers backwards for you real quick so that you can use that when you're working with the investors so that they know that you know the numbers that they're looking for. So we're going to go over two different examples today. I'm going to go step by step, pretty in detail on the first one, and then the second one, we'll run that one super fast. So if you're an investor, if you're a realtor working for an investor, they want quote unquote a deal, right? So basically anything that's 20% under market that covers the make ready cost, because the 20% under market is the margin that they're going to need. It's the margin that they're going to need to be able to do the rehabs. See up above there where it says Cushing, all price ranges, single family, and I did 2,000 square feet and below, minimum 3 beds, minimum 4 beds, and then 2 baths, minimum 3 baths. So if you plug this into any of your MLSs, whatever, you're trying to figure out what the median sales price is. So if I go over here on our MLS, the median sales price for Cushing is $185,000. So you wouldn't want to deviate too much from that. And the reason you don't want to deviate too much from that is because on the bell curve, you know, the bell curve that we were taught back in grade school, I think middle school is the first time I heard about it. That's where a majority of your buyers are going to be. That's going to be where 60% of your buyers are going to be, 20% down below, 20% up above. But that bell curve is 60% of the buyers. So an investor who's smart, an investor that wants to do the most amount of production as possible, not an investor that specializes in luxury rehabs, but an investor who specializes in getting their crew in there, doing the make ready, getting the property on the market with you as the person that found the deal. That's part of the whole thing. If I find you a deal, you're going to relist that deal with me when you get the make ready done. That's part of the deal. You're going to talk to the investor up front. If they don't want to list the property with you, they're like, no, I'll take care of it myself. I've got a buddy who does it for me. I just need you to find the deals and I'll pay you whatever your spread is, whatever that spread is. That's not the investor you want to work with. You want to work with an investor that you're going to get paid for finding the deal, and you're going to get paid when you sell the deal. You're going to be getting paid whatever your fee is to find the deal and get that investor the deal. And then also when the investor rehabs it, lists it on the market, you're going to be the listing agent for that deal too. If they don't want to agree to that, there's lots of other investors out there that will agree to it. So unless you're able to help them purchase and sell, I can't recommend working with them. You want to work with customers that respect you as a salesman, respect you as a saleswoman, and understand the numbers, understand the business, and know and are proud to work with an agent who understands the business, knows the numbers, and understands how it all works. If they don't want to let you list the property, I say get a new investor. That's me personally. You guys do what you want. This is just a video on my thoughts and opinions. It's not the thoughts and opinions of Sesame Street or Mr. Rogers or anyone else. They're my thoughts and opinions, and I'm looking out for you. That's who I'm looking out for. Okay, now the numbers. Okay, you see right here where the median sales price at Cushing is $185,000. You want to hit that bell curve, okay? We can all understand that now. Reach out to me. Contact information is down in the description below if you got a question on that. So you got to pull off 20% margins. Sorry, 26, because you gotta include your fee for selling the property. So 26%. So 185. You charge whatever you want. You charge whatever you want to sell someone's property. Okay? Take off the investor's margins and your fee for selling the property. So 185 times 74 times 0.74. 136.9. So you know automatically, before you even walk into a property, you know that deal, regardless of the repairs, at the price per square foot, it could go plus or minus 10% on the median price of the market. But the price per square foot, the sales price of the property, plus or minus 10%, because you're going to have basically a brand new house. Cannot be what this seller is willing to let go of this property for 136.9 if it needs a make ready. If it's more ready to flip or it's more move-in ready, the investor may want to buy and hold it at this, depending on how good of a property is, depending on what rents are in the area. But you know right now, if your market is saying 185 $100,000 median sales price for the median, the bell curve, you can't bring a deal to an investor for more than $136,900, basically $137,000, basically $137,000. It's not a deal to the investor if they don't have equity, if they don't have margins to flip the property. So now you need to back out expected closing cost. So you're going to take $7,000 off of that. Expected closing cost, title, abstracting, potential concessions, potential, items on the inspection, etc., etc. So you're looking at $139 for potential closing costs. So you don't want to be in a property. You can't bring a deal to an investor for less than, in this market, $185K sales price. You can't bring a property to that investor for more than $130K property. Now, if you go to the property and it needs a new roof, take off $15,000. If it needs floor and carpet, at the time of this video, if it needs new flooring or new carpet, take off another $6,000. So let's say it needs a new roof and it needs new carpeting. So take off 6 and 7, $13,000. So take off $13,000. So right now, looking at this example property, the seller cannot want to get, if it needs a new roof, if it needs new flooring, for the margins and potential wiggle room with concessions, you can't, if this seller wants to sell the property more than $117,000, it's not going to work for an investor. It's not going to work for an investor. Now, you might find 15% investors. So that roughly gives you about $7,000 more to work with. But those are low margins to send a crew in to rehab and do a make ready on a house. Now, if the house is a smoker house and the heat and air is dated, if the heat and air is 20 years old, we're going to need new heat and air, and you're going to need to kilt everything and repaint everything and new fixtures. So if you're having to kilt everything, you're having to repaint everything, and you need new heat and air, I'm going to say heat and air is $10,000. So take off $10,000. We're talking about a smoker house now. Take off $10,000. That seller can't want to sell the house more than $107,000. Take off the paint. I'm going to say another $7,000 on paint easily. The kilting, the paint, everything. And then let's do a $2,500 fixture packet. So right now, if it's a smoker house and the numbers work out, if the make ready's done, it could get $185,000, maybe even $200,000. But always focus on the median. You might be able to beat the market after the make ready, but you don't know how good their contractors are yet. If you've worked with the investor and you know the investors are good, you could beat the market by 10%, by 15% because of the make ready quality that this investor and this investor's crews do. Then by all means, run the numbers backwards from where you're at. But as of right now, if this is a standard make ready, standard 20% margins that the investor wants to make, back off your commissions, your fee for working hard. You deserve to earn money on what you do. That's okay. You can earn money on what you want to do. So you're looking at a smoker house as an example. You're running the numbers backwards. You're looking at taking off flooring allowance, roofing allowance, and what else? HVAC, flooring, roofing, and fixtures. And then you'll have a pristine, 9 out of 10 property when you go to resell. That particular seller, whether it's a trust, it's some children from a probate, or it's a seller who doesn't have any heirs and they're ready to just sell the property and move to Florida and enjoy life in Florida, if that seller needs more than 97.5, the numbers don't work. The numbers don't work based off of this example that we've discussed on this property. The example of needing a new roof, needing new heat and air, needing new flooring, smoker house, needing new paint, having $7,000 in wiggle room on seller concessions to the buyer. You got to get this property for $97.4 for that investor to make money. But here's the very last part of this. When you go to meet a seller to look at a property for an investor, you're always going to that seller as a listing appointment because you want to secure the listing right away when you're there. Because if your investor doesn't want to purchase it, then you put the property on the MLS as a marketing to market it to all the investors in the area. And I promise you, each time we've ran the numbers backwards, if one of our investors didn't want to buy the property, we put it on the MLS. We've always received multiple offers if the numbers make sense. If the numbers make sense. So, of course, in this 97.5 that the seller wants to sell for, you still have to walk the seller through the seller closing cost as a listing agent, which are commissions, title, taxes, and whatever doc stamps, depending on what state you're in, etc., there are. So 97, if the seller's like, yeah, I'm open to selling this property for $90,000, you can say, hey, Mr. and Mrs. Seller, guess what? Guess what? You're going to be able to make that and maybe $1,000 more. Maybe $1,000 more. If the seller is practical, they understand all the work that's needed on the property, the only part that you have to help them understand is the seller closing cost and the margins that investors need to go in and do all that work. And that's any company. Any company that does any work whatsoever, they work off margins, guys. Whether it's Walmart with the dollar margins that it has on milk, or whether it's the farmer with the $2 margins on milking the cow and selling the raw milk to the factories, to the stores, or whatever. Every company, if it doesn't have margins, it doesn't have profit. So you just help the consumer, the seller, understand the business, understand the numbers. You're going to be able to secure that listing, and you let them know, hey, I'm going to run this by my investors, because you're probably running ads, sell your property as is. You're probably running ads to get these types of leads. Sell your property as is, no questions asked, cash deal. You apply it to the investor, and when you're talking with the seller about it, I'm going to run the numbers. I need to come by and look at the property, run the numbers, get it over to my investor, see if it works. And don't worry, Mr. and Mrs. Seller, if my investor doesn't want to buy it, you're not lying to them. You're going to pitch it to your investors first. If my investor, I'm also a licensed real estate agent, I'll put it on the local MLS and we'll pitch it to all the investors in the area. How does that sound? If I can't get my cash as is quick investor to buy it right away, as soon as title is clear, then we'll just put it on the MLS. We'll reach out to all the investors in the whole state. One of them's going to need to do a 1031 exchange. One of them's going to need to buy the property, do the rehab. We'll sell it that way. Not only do I have one, but I've got the whole market of investors. How does that sound, Mr. and Mrs. Seller? They're going to be like, woo, man, Josh, sign me up. I want to sell this house as is. Or you're talking to the children. Yes, we need a balance. We need to close out the estate. They had a lot more bills than we were expecting. We need to close out this estate, pay those bills, pay for the funeral, and move on with this chapter of our life. Okay, guys, I'm not trying to be raw or mean or anything, but a lot of parents right now who are passing away, they're deaded out. They're deaded out. They're letting the houses and the properties go back to the bank because they were so far over-financed, over-leveraged. The credit card companies are SOL, and then the banks are getting the properties back because they took out a first, second, or third mortgage on them. Okay? I'm not being mean. I'm telling you another way to do real estate that I've done in the past myself. These opportunities come up. Even if you're not out there marketing for these opportunities, guys, when that trust attorney calls you who's a friend from high school that realizes you're in real estate and they happen to turn into a trust attorney, you need to know how to run these numbers backwards. Get over to the property, see what the value is of the property at market, run the numbers backwards with the margins, with your hard-earned commissions, your hard-earned fee that you get with a little bit of concessions, whatever the concessions are going for in your market, whatever the rehab numbers are. And if that number works for the seller, the probate attorney, the trust attorney, the descendants, the heirs, etc., you've got a deal. You've got a deal. And the great thing, if you're working with an investor, make sure when you're pitching this deal to them, when you're working with the deal to the investor, say, hey, I've got a great deal. I know you're an investor in the area. When you're the one pitching it to the investors, say, hey, if you do the make ready on this thing, if you don't keep it for your own portfolio, I would like to offer this deal to you. Here's the numbers on it. If you're interested, and I get to list the property when the make ready's done. And you could put all caps, I want to be crystal clear. If this is not a property that you fix up and hold in your inventory, if you sell it within the next 2 to 3 years, I will be the listing agent on this property. If these numbers work for you and that's something you'd like to do together, I'd love to start this relationship with you. And it's a relationship, guys. It's a give-give, win-win when you're making these deals with investors. So that's how you run the numbers on investment properties. Let's look at another market real quick, just so that, like I said at the beginning, we'd look at 2 different markets. I'm going to go ahead and go over to Oklahoma City. And then be sure to select all price ranges, single family house. I'm going to go ahead and bump Oklahoma City to 2,500 square feet, 3 beds, 2 baths, 3 baths, da-da-da-da-da. And now we're looking at $240,000, $240,000 as the median home price. So let's go ahead and run those numbers backwards. I'm going to delete all of these prior things on the calculator right here. Let me get them deleted real quick so we can start fresh. And let's run it backwards. So remember, $240,000 is the average market price. Those are the neighborhoods that you're going to be target marketing in. Those are the neighborhoods when you do drive-throughs on the neighborhoods, you're going to be writing down those addresses where it looks like the house is vacant, so you can reach out to the owner, do the tax records, etc., however you do that. Call, text, email me. We can go over that in detail too. That's not on this video. Just call, text, or email me. We can go over all that in detail. So times it. First step, number one, times it by 0.74%. That covers the builders, that covers the rehabbers, the flippers, margins, and whatever your commissions are. You could times it by whatever. The builders, the rehabs, the flippers, they're going to want 20% margins to send their crew in there. Basically, they're going to get $48,000 off this deal. $48,000 off this deal when they rehab it. After we back out costs, that's profit. That's profit. That's them rehabbing the property over 5 to 6 months. $48,000 in 5 to 6 months. When you look at it, when you're paying taxes, when you're paying insurance, when you're paying overhead, things like that, that's why these rehabbers, these flippers, they got to do more than one deal a year, because that's not going to even pay the bills. That's not even going to pay. That's why you got to do 5 or 10 rehabs or flips a year to make a profitable living at it, because of taxes, insurance, livable costs, manager salaries, etc., etc. So $240,000 times 0.74 is a number you're starting at. So if a seller calls you, they're like, yeah, we got this property, and it works out to the median sales price because that's where you're marketing to. If they say on the initial phone call they need $175,000 out of it, you know that thing's already got to be good. It can't need any rehab, because after that first number that we take out, the commissions for you when you list it and sell it, because you deserve to get paid for your hard work, plus the margins, then you got to back out costs. Let's say it needs a roof, and it needs heat and air, and it needs flooring and just paint. So take out the roof. Let's say this one's a $15,000 roof. Take out the flooring. So I'm going to take out $6,500 for flooring. And I'm going to take out a heat and air. Let's say this heat and air needs to be ran overhead. It can't be ran underneath anymore. So let's say it's $1,250 on the heat and air. So paint, and let's give it a $2,500 fixture packet. It never hurts to throw a fixture packet in a property, minus $2,500. So when you come up with all that, the $140,000 has to satisfy, in Oklahoma City, an existing home that's nice, that's marketable, that's been flipped. They probably won't have to pay concessions, because there's a lot of buyers for Oklahoma City compared to more rural markets like Cushing. But this seller can't want more than $140,000 for that property because of its current condition. And you as a salesperson, you educate them on the process. Like I'm doing on this video to you as the real estate agents. You do this same thing with the seller in person or on the phone, or do a screen share, do a Google Meet with them, educate them. If the numbers don't work for them before you're going to the door, just put them on your follow-up list. Just check in. Okay? And then when they realize that your numbers are right, if you're the one who keeps checking in, you're going to earn that business later on down the line. If it's a trust attorney, if it's a friend whose elderly grandparents just passed away, if it's someone you have a relationship with, they're going to trust your numbers. They're going to understand it. It's a business transaction. They're going to understand it. Okay? But if it's someone that you're running ads to, or someone that they may have called you off one of your postcards, you'll have to educate them a little bit, and every now and then they're still going to try to for sell by owner on it or something like that, and they're going to realize real quick what your numbers were and that they made sense. And then you continually checking in with them, you continually saying, hey, regardless of whether you try to sell it on your own or with someone else and they overpriced it, I'm still here. I do real estate every day. I do real estate every year. I'm still here to help you with to sell that property. So in this example, $240,000 house that needs a roof, needs HVAC, needs carpet and fixtures, you're looking at needing $140,000 for that seller to sell it Don't forget, you're going over there with a listing agreement. Run the numbers backwards. You're doing a transaction. You're conducting business. Okay, you don't go find deals for free. Run the numbers backwards on whatever your fee is, whatever the title company is, etc., etc. If the investor's covering the title company expenses, then you're saving the seller who's selling to the investor money right there. But go there with the listing agreement. Remember, if it doesn't sell to your cash investor who closes in 2 weeks, don't worry, Mr. and Mrs. Seller. I am a Realtor member. We will get this property listed on the MLS based off these numbers, and we'll have access to all the investors in the area, and one of them will probably pick it up. Don't rest them assured that one will. Let them know one of them will probably pick it up. And I'm telling you, as agents, 9 times out of 10, you're going to get multiple offers if you ran the number correctly, and they're going to get a good price for the property. They're absolutely going to get a good price for the property. So that's this month's video. I hope you found value in it. I'll figure out some sort of way to work this into the book as a chapter. Of course, that way, when I finally do get around to publishing the book, it'll have all this amazing information in it that you guys can use. You guys can share with your new agents that you're onboarding, all your sponsors, etc., etc. Because, of course, I know that you guys are all with me over at eXp Realty, taking advantage of everything that eXp Realty has to offer you, the tools, the systems, the training, the technology, and the easy access to your broker team, because you have more than one broker at eXp Realty. Plus you got me, plus you got Jesse, plus you got Jackson, and you got the whole Honey Badger Nation to help you with your real estate goals. Thank you so much for watching today's video. I really appreciate it. Share it with any of your real estate friends who are wanting to get more investor business and wanting to run the numbers backwards. This is a quick, easy way to do it. If you do this every day, over and over again, if you just look at one property a day for the next 4 weeks, so 5 properties for 4 weeks, look at 20 properties, run the numbers backwards on them, you'll have this formula down. And when you're driving around town, you'll be able to automatically put the address in your little address book, or you'll have your postcards next to you. You'll fill out your postcards, you'll drop it in the mail when you're going in between appointments in different cities, so that sellers reach out to you on your website, put in their address, you get their information, you call them, you find out if it's a retail deal or an investor deal like we talked about today, and you move in whichever direction that makes sense for that seller and you and your business. Thanks so much. Josh Barnett, eXp Realty. I hope that one day we can work together. I would love to help you in all your real estate needs when it comes to technology, training, systems, support, and access to brokers. See you guys on the next one.